Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, let's take a look again what is going on the euro currency. That is the daily time frame. So we see that upward move still continue, and market has started to creep with the overbought condition. So that was one of the possible scenarios, although I have hoped that market probably will show some retracement at least to the weekly pivot point, but you can see that market even hasn't touched it. So the weekly pivot point hasn't been traded within the current week, and market has continued to move to the upside. How to treat current situation and what we could do in such kind of environment? Well, in general, the technical analysis, as you know, the stuff of the probability, and everybody knows that if even market will hit some significant resistance or any significant level, pattern, or if you will see some situation on the market that will be absolutely clear for you and obvious, everybody knows that market could do anything, and we even do not need to speak about it. So that's why when I prepare my analysis, I based my thoughts on probabilities. And what sort of probabilities we could suggest in this case? You could think about it by yourself. Just imagine when market has hit level of overbought right at the monthly pivot resistance one, or around some significant area of resistance, what probability is greater? That market will show some pullback, or that market will show fast acceleration to the upside? I think that the former is more probable than the latter. And that's why in the current environment I still think that this is not the time to enter on the long side of the market. For those of you who didn't read our weekly analysis on the monthly and weekly time frame, I suggest you to read it on our forum with the charts, because if you will take a look at the weekly time frame, you will see that right from the area around 129.30, 129.50 till the 131.30 area approximately will stand the monthly conference resistance. Also in this area stands the 127 extension on the previous move to the downside, the previous retracement on the weekly time frame, and harmonic swings also suggests that that could be the potential target of the retracement to the upside. So in the current environment, when the market is creeps with the overbought, as you can see, market needs to force with this area. So we can see market break this area, returns right back, corrected by, and was pressed by the overbought condition. Now again trying to push it, and again returns right back below this line on the yesterday's trading session hour again. So you can see right above this market stands the weekly pivot resistance 1. It's 127.65 area. Oh, sorry, 129. That from the monthly pivot. So that's around 129.25 area approximately. So that's the lower, almost the lower border of the conference resistance on the weekly and monthly time frame. And that is not much space till this area. And personally, I probably will skip some pips, but do not take the risk entering right at the monthly conference resistance at daily overbought condition. So for me it's better to wait some further development and act on some clear patterns, especially when I expect some deep retracement in the nearest perspective, based on the due to the reasons that we have discussed yesterday, since this is just the first upward bullish swing on the weekly time frame, and when the market shows the first, if you could call it, reversal swing, as a rule it shows the deep retracement, since the bearish momentum is still strong on the market. That is what I particularly expect. But This retracement probably will start from some significant resistance area that is ready to begin from 129.30, 129.50 area. That's the lower body of the confluence resistance. So in the nearest term, I suppose that market still could creep till this area to the upside. If you trade on the daily time frame and the higher time frames, it's better, I suppose, to wait a bit. But if you're intraday trader, you could still trade on the long side of the market. Why not? But in such environment, it's better strategy when you will take profits on the previous highs. So you can see, if you trade intraday, that was the high, that is the level of overbought. So market shows some retracement inside of the day. You could try to enter and take profit on the previous highs. So that is a well-known tactic when the market stands at overbought. Another moment that I would like to discuss with you is that take a look that market has passed through the monthly pivot resistance 1. So by this action, it suggests that we can't call it just like retracement inside of the bearish trend on the weekly time frame, because when this is just a retracement, usually the pivot resistance ones usually holds the retracement, but acceleration above the pivot resistance 1 suggests that market is ready to show some medium-term reversal, some further upward price action. Well, that's what about medium-term perspective. In the current intraday charts, I did not see much. That's why I just used the hourly time frame. So take a look at this development. You could see, first of all, bearish divergence very strong with the current price action. Another moment to watch for is that take a look, that could be treated probably as butterfly or something like that. So you can see that market has reached 1618 extension and now consolidates around this area with the divergence is forming on the hourly time frame. Well, potentially this really could turn to some sort of the head and shoulders if market is ready to show some reversal right from that area. But I suppose that it's still possible that probably market could proceed a bit higher since it hasn't quite reached the significant resistance area. So it's probably we could get some more continuation to the upside. But if you take a look at the weekly time frame, just a moment, I will show you. Take a look. This is the 618 resistance 130.30 from that high, but there are two lower highs that also creates the resistance area. So that's why it's very difficult to predict when the market will stop, particularly because here there also could be the resistance, and between current market and that level also could be the 618 resistance. So it's a bit market will have to force with these resistances and simultaneously with the daily overbought condition. So that will be probably very choppy price action in the nearest future with a significant retracement to the downside. Anyway, in the nearest future I will keep an eye on how market will respect and how it will behave around monthly confluence resistance area. So I prefer to see here some reversal pattern on the daily time frame. Probably this could be some sort of the 3 drive. Maybe this will be butterfly. Maybe this will turn in some sort of the classical patterns, head and shoulders or something. But this pattern probably will be a bit extended in time, since this is reversal around monthly confluence resistance, and on the daily time frame the forming of the reversal pattern could last a bit longer. So that is choice is up to you how you will act. To sell or to enter short currently is also not the case, because daily time frame is bullish and we do not have any reversal patterns yet. We do not have any directional bearish pattern as well. So maybe you will see something more. Maybe you could trade something that you see currently on the market. But that is current my view on the market. I suppose personally, first I will wait some reversal pattern on confluence resistance, and before pull trigger I will wait for appearing some clear pattern or some signs that will absolutely clear tell me that it's time to sell, or that market will continue move to the upside. Of course, previously I have seen how market moves through confluence resistances without any respect. For example, they could see it on the crude oil charts. That also could happen, but as I said, technical analysis acts mostly based on the probabilities, and the probability that market will respect somehow the strong area of resistance, I suppose, is greater than it could pass through it without any respect to this area. So that's our current view on the market. Trade according to your trading plan. Keep an eye on the current development because it could be very interesting in the nearest term. Well, control risk and wait for the clear patterns. Wait for some real worthy signals, because acting currently just by gut feelings could be very expensive for us.